Welcome back to the Afterword, conversation about the future of words. We are glad to have Susan Stahl and Keri Smith here with us to continue our conversation to help us understand the nuances of loans and lending. Will you explain a bit more about the background behind fair lending and justice and how they're connected to equitable loan practices?
I think can I take that one first, Susan?
Go for it, Keri.
Okay. Well, for us at Self-Help, we were actually formed back in 1980 around economic justice. In fact, our mission statement is that we create and protect ownership and economic opportunity for all, especially people of color, women, and those in rural residents. And what we've learned over the years as an organization that, there has been a lot of systemic barriers that were put in place to keep certain folks within our communities from actually participating fully in economic growth and ownership and wealth. And so when we talk about and we relate economic opportunity and or how that is framed around justice, our organization is very active in this space. Part of the Self-Help family is the Center for Responsible Lending, which is our policy and advocacy arm on the national stage. And we do a lot of work, especially around this predatory lending issue and student loan debt, and as well as mortgage lending. So for us, this is what we do every day. And I think if you're looking at an organization, that you're looking to maybe get a loan from or build a relationship with, I think it's important to look at what their mission is and how are they living out that mission. And does it align with your personal mission? Does it align with what you feel is just? So for us, it's what we do every day.
So Village Engaged comes at its work through a faith-based background. And one of the things that I can say is there's nothing new under the sun. So we can turn, and with Village Engaged, we turn often to Christian scripture. And there is so much written about usury, about money lenders. So there is nothing new about one group of people taking advantage of another group of people who are in need of funding. So it continues to be in our world today that the people who are being taken advantage of in South Carolina are people of color, women, and the elderly. And there are a few people who are profiting by making loans with extremely high interest rates and fees to this group of people. So there's really nothing new under the sun.
And just a context for South Carolina, the Sisters of Charity actually has a wonderful poverty study. If you get a chance, I highly recommend that study. But then we also looked at the Consumer Affairs also puts out a state of lending report every year. And when we overlay the counties that have the highest poverty rates with that report, with the interest rates, the average interest rates in those counties, in South Carolina, those counties with the highest poverty rate have the highest average interest rate. And I don't necessarily think that is an accident, in my opinion.
Okay. Wow. Lots to think about. So you both are very passionate about your information. And I can imagine just from the stories you've shared, it probably is hard not to run down to one of these payday lending people and shake them. I'm not suggesting that. But it also sounds that you are coming at this from a more permanent platform by looking at litigation and laws. So, Susan, I'm going to start with you first. You kind of alluded to this a bit. How are some of these state and federal laws helping or harming economic mobility? And what would you like to see amended or changed?
So I want to tell you a really cool story about a piece of federal legislation called the Military Lending Act. If we hearken back in time when the U.S. was waging war in Afghanistan and Iraq, and if you think about our military, it's an all voluntary military. You're not forced into service. But there was a growing concern among the leaders of the military. Predatory lenders had their storefronts right outside of military bases. People in the military raised the red flag and said, we are really concerned about the impact that high-cost predatory lending is having on our service members. So the Department of Defense conducted this detailed examination about the financial well-being or not of their service members. And they ended up basically saying that predatory lending undermines military readiness and it harms the morale of the troops and their families. And it adds to the cost of us fielding our troops, us doing business. So what happened was, in a very bipartisan effort of Congress, President Bush, George W. Bush, ended up signing into law the Military Lending Act. It took effect in October of 2007, and it was a groundbreaking consumer protection law that set an all-inclusive 36% annual rate cap for active duty service members and their families. Studies were done like 5 years later. They said it worked. There are just some holes. So what happened was in 2015, the Federal Military Lending Act was actually expanded for active duty service members so that all types of consumer debts were capped at 36%. So we have here in the United States 5 million people that are active duty service members and their dependents who are protected, and we know that it works. So it's not some pie in the sky. We think this might work. We have 5 million people from all over the country, every different demographic, different ages. We know that it works. And so what's happening now is other states are mirroring that Military Lending Act in their states. And that's what we want to do in South Carolina.
Okay. And not only do you have the 5 million people, but you've got time on your side. I mean, if this thing was enacted in 2007, we've got the data.
Yes, it is. This is not pie in the sky. This is something that we know works.
Okay. All right, Keri, what do we need to see added or amended or changed at the state or federal level?
Well, we are, it's exciting that more and more states are taking on this issue. The most recent state that passed an all-inclusive 36% cap was Illinois. And Illinois, they did a report out after the law took effect, and has said that, because one of the biggest things that we hear from legislators and people that if you cap interest rates, access to credit will decline. And what we've seen is it's just not true. In fact, in Illinois, while they did have a few national lenders that made a decision not to, no longer do business in Illinois, they reported out that they had 63 more applications of lenders to move into Illinois after their rate cap. So here in South Carolina, there is no cap. A lender can charge any interest rate they want. And unfortunately, we have run up against, several legislators that, in fact, one shared with us, it was an upstate legislator that said, well, in South Carolina, we believe that people should be allowed to make mistakes and either learn from it or not. So for us, our neighbors to the north and the south, North Carolina and South and Georgia, both have protections. And unfortunately, some of their residents come to South Carolina and are taken advantage of. We're not a very good neighbor if we look at it in that way. And it's just like in the work that I've done in the Philippines and different places in credit unions, if there is not a good framework and protections by way of legislation, then consumers are going to be taken advantage of, especially in industries that deal with money, investments, lending, and those kinds of things. We've seen it happen over the history of this country. So it's very important that you have a good framework for these lenders to operate in.
Yeah, I guess what I can't, and I don't know, maybe our listeners are going to feel the same way after listening to both you and Susan talk, Keri. I'm kind of scratching my head and going, this seems like a no-brainer. Like, why isn't this being done yesterday? Why is this taking so long? But, I'm hearing some of the arguments, but just doesn't seem to hold enough water.
Yeah. So one of the things I want to mention is, and we'll talk a bit about this. So I mentioned the South Carolina Fair Lending Alliance, and we've done polling with voters in South Carolina. This is a no-brainer with the voters in South Carolina. People are like, what do you mean? 36% is too high. So the rub is we can't make this a ballot issue where you and I vote on what we want in South Carolina. This is something that our legislators have to vote on. And the industry, the high cost lending industry, makes extensive campaign contributions and has a very powerful monetary reach to our elected officials.
Okay. So with that statement, I'm going to extend this question just a wee bit. What should the average listener hearing this do? What would be the call to action, Keri and Susan?
For me, when I found out that there was no limits and things in South Carolina, it just blew my mind. It was like, no, that can't be right. The first step I'd love folks to take is go to capratesc.org or com, either one. We have both domains. And just read. We have links to all the different studies and articles. And, there's just a wealth of information there if you want to learn more about the issue. And then from there, get engaged. On that website, they can fill out a contact form, get that to us, and then we'll get the right folks to them to answer their questions or to get them engaged in the issue. And then, of course, if you know legislators, you got some friends, or your church faith community is interested in this kind of justice, get involved. We have folks that can speak to any group around the state and be able to share this information directly. But knowledge is power, and we need folks to act in our state.
Okay. Excellent. Thank you. All right. So let's just pivot a wee bit. Let's talk about the issues right now with current inflation and supply chain, global financial insecurity. We're hearing this in our news daily. So what would be your recommendations if someone does need a loan? Let's say they don't have a MICA fund or there aren't those resources in their community. What do you do when you have been rejected for the loan? Because at this point, you are triggered with the emotional concern. So what would be the next step, Keri?
Well, first of all, I want to use a different word than rejected.
Okay.
Because with a loan, it's more to be. I think a better word to use is denied.
Yep.
A loan, and for us at Self Help, we don't necessarily say no. We may say not now, or maybe we can't do exactly that, but we might be able to solve your issue with this. It may not be Y, but it might be X is the best solution. But when a lender, if they do give you a denial or maybe a not yet, ask why. Because sometimes it's a matter of maybe you just need to clarify some things. But the other thing is understanding why you received that denial can help you as you're trying to figure out what your next steps are.
Okay. How about you, Susan?
Yeah, and I would just go back again to what we talked about, I think, in our last session, that take a pause, like what feels like an emergency, an extreme need. Take a pause, take a breath. In most communities, there are organizations, or in a nearby community, there are organizations that can help with free professional advice to help you think through what your options are. Because quite frankly, Keri talked last time about her medical emergency and how you lose kind of all sense of time and place, and oh my goodness, I don't know what to do. So to be able to take a pause and a momentary, and I'm talking just a very quick step back, and finding people to help advise you. Because what happens with so many people is they're ashamed. They're like, oh my gosh, I have this need. I can't tell anybody. I have to hide it. I have to cover it up. We talk a lot now about mental health issues and how we need to talk about them. Same thing with our funding needs. There should not be shame when you have a funding need. It is part of life. So just taking a pause, thinking about who can you go to as a resource to get another opinion.
Excellent. And we have, United Ministries and Salvation Armies all around the country. And in many countries, they have similar agencies like that. So that's great advice. Awesome. Thank you so much.
Well, let's go back to where we started with Mr. Dickens. What are some of the products or lenders or schemes that, should Charles Dickens be alive today, he would warn us about?
So I'm going to jump in here because I talked to you earlier about my story about the power that the story that I saw when I read a high cost lender annual report. So if you are getting mail, if you are getting email, if you are getting notices on your cell phone where it's all about easy money, this is so easy, don't you want to buy the best gifts for your kids, like easy money in and out, all you have to do is fill out this little thing, I would just mark a huge beware. If it looks too good to be true, it is too good to be true. If it looks to be too easy, there are problems. So being aware that these marketing tactics are designed to suck people in. They are preying, they understand our psychology, they are preying on our emotions of wanting to take care of our families. Beware and understand what you're getting yourself into.
So, Keri, you're telling me not to take that Amex card with all those extra points for shopping at the grocery store?
I wouldn't say not to do it. What I would say is to evaluate the cost of that Amex card, and do you really need that? Because with anything, when you have that card, there is the temptation to utilize it. So if you feel like that you can manage it, and it's in the fees and the interest rates and all of those things are in line, it's not necessarily a bad deal. But it would have been much better if you came to that conclusion instead of through that that text message. That's the danger in these, is because they'll show up if you like to play various games, right? All of us at some point or another probably, waste time on various, games and apps. So I think it's pay attention to where those ads are being presented to you, and just be very skeptical of them, and pay attention to what that organization is and what do they stand for. My biggest thing for folks is build a relationship with a financial institution, and start with whoever has your checking account. Generally, folks have to have a checking account now for pay. I mean, most companies are doing that now. You have to have direct deposit anyway. Start there, but you are proactive. It's you doing it, not reacting to an ad. So, and just be careful, like Susan said. If it sounds too good to be true, most times it is.
That's really good to know.
Well, Holland, you get to decide if you want the magic AMX card.
Well, I had already deleted that email, but then as she started telling me about the APR, I went back and looked, and my APR would be between 16.24 and 26.24% with a 30% penalty when it applies. So,
ouch.
Yeah, that one doesn't look like something I need right now.
Okay.
But like I said, I had already deleted it, but I went back when you said that because I didn't even think about that. I just automatically, got rid of it. But yeah, just reading even a little bit of the fine print really changes the perspective, really changes the way the picture looks, doesn't it?
Absolutely.
Oh, that's actually a very good example, Holland. Thank you for being a model for
Well, I had no idea. It just came in on my email while we were talking.
Perfect.
Okay, last question. What's a metaphor, a word picture that can help us understand loans and lending better?
So Keri and I were talking about this, and we were like, okay, what would we use as a metaphor? It's summertime. People are going to the beach. If I'm going to the beach and I'm thinking about getting in the ocean and going swimming, I am going to do my research to understand where along the coast are there shark attacks. Am I going to be jumping to go swimming into a part of the ocean where we know there are a lot of shark attacks? So that to me is the great metaphor of, think about it as you're walking from the sand, you're thinking about getting in the ocean, you're thinking you need to get in the ocean. It's going to be really refreshing. It's going to solve all your problems of being hot and sweaty. But what is in that ocean? Is it shark infested?
I don't know, Keri, do you have anything else to follow up on that one?
Just the only thing that I would say as a metaphor is, I had somebody ask me, about revolving credit prior to the earlier question we had about it, and they said, help me understand, other than affecting the credit score, that revolving credit. And I said, well, it's like the fact that a cell phone. You don't really need a cell phone. You can get a landline, but in today's world, a cell phone does facilitate, a quality of life, such as being able to apply for a job online and things like that. So we don't need a cell phone, but having the cell phone does improve our quality of life. And so it's the same thing with revolving credit. To live every day, you might not need it, but it's going to affect and improve your quality of life, because credit score touches everything from your car insurance pricing to your health, your life insurance, whether you can get a light bill, a light account with a utility company and things like that. I think it's important just to understand that, while credit can be poor and bad for us, it is something that can help improve our quality of life.
Okay.
These are great metaphors, and I particularly like that image of sharks because we talk about loan sharks, right? Good play on words there.
Yes, exactly. We talk about loan sharks for a reason.
Well, Keri, where can folks learn more about Self-Help Credit Union? You told us this at the very beginning, but tell us again where folks can learn more.
You can go to self-help.org is our website. But if anyone would like to reach me personally, you can go to Keri, KERRI.Smith at self-help.org.
All right. I was just typing that in as we were talking there. Susan, where can we learn more about you and your work?
Yeah, so I would encourage everybody to go to villageengage.org. And I also mentioned the South Carolina Fair Lending Alliance, which I am part of the steering committee. And we've mentioned it already, but that is capratesc.com.
And we'll put all those links in our show notes as well for all of our listeners.
Awesome.
Wonderful.
Thank you so much. So join us next week. We'll be talking about our budgets. We'll be talking about saving pennies with our purchases.
That's a good segue, don't you think, Holland?
Quit borrowing and start saving, right?
There we go. Well, thank you so much, Susan and Keri, for being with us. This has been a fantastic conversation and so needed. Those of you who are listening, please leave us a review, rate us on Apple Podcasts or wherever you get your podcast. Become a subscriber to the afterwordpodcast.com. It does help us keep the conversations going. And as always, please remember you are welcome at our table.